Hey there, my name's Curtis Lucas and you're watching Empire Building. Now, in this episode, I'm going to be talking about the one thing that's got to be driving many people absolutely nuts. The fact that in the Bitcoin mining space, investors are just not created equal. These companies are not created equal, despite the fact that they all have the same business model, despite the fact that many of them have similar controls over their cost structures. All other things being equal, one might be led to believe that it should at least follow the price of Bitcoin. Yet instead what we witness are drastic deviations from that pattern. Right now, this is most apparent for those people invested in stocks like Riot Blockchain, Argo Blockchain, Bitfarms, SOS, God forbid. I know most of those investors probably still hate my guts. But that one I did try to warn people. And there are many others. Investing in those stocks feels like you're just slaving away, waiting for things to get better. But instead of getting better, they just seem to keep getting worse.
Battle speed, Hortator. Battle speed!
And you find yourself asking, how long can this possibly go on for? How much suffering do you really have to endure before you finally tuck tail and run and head over to the other side, where investors in Mara and Hut 8 seem to be just living the good life? Everything's all champagne and cocktails on that side. So in this video, I am going to try to provide some perspective on this issue. So obviously, I have to start out with a disclaimer that this is not financial advice. You all know this. It goes without saying, but I have seen some people comment on what I might have told them to do months ago or even a year ago. Who knows? The point is, you all need to be making your own decisions. It is your money, and only you can make those decisions for yourself or consult your financial advisor. But in addition to that, I also have to add this little caveat that the more I thought about this, the more I realized that there are a lot of different issues, and it's specific to each and every single company. And while preparing for this video, I realized that I could end up going down tangent after tangent after tangent after tangent, and I really don't want to do that. Each one of these layers of issues could deserve its own video. But that's not the objective that I'm trying to get to in this video. I'm merely trying to explain the main key reasons why these discrepancies exist. Sometimes they're warranted. Other times they don't make any sense at all. Being able to determine the difference is what presents people with the greatest opportunities. But just know that despite the fact that you might be right, the market can take a considerable amount of time to come around to seeing things your way. But you also have to be careful that you're not simply deluding yourself. And you have to understand the broader market forces at play here. So to get started with this, I thought I'd start by having a look at each one of these companies and evaluating where it is with respect to its all-time highs. Mara just approached that all-time high, nearly reached it, but has since pulled back, as all the mining stocks have with Bitcoin's current correction that we're going through. I might do another video on that very shortly, but for those of you that are wondering whether or not we've bottomed out, obviously I can't say for sure, but personally, looking at this chart here, Bitcoin is consolidating currently at this region here, which could suggest we are going to see support here early. I say early because in my last video I talked about how I thought that we would probably find support around the $1 trillion market cap area, or the 50% retracement from this run that we just had. That would bring us down to about 53,000. But I would not be counting on that. The best thing, as always, that you could be doing is dollar cost averaging. There's no rule that says we have to fall all the way back down there. And the last thing you want to be doing is sitting out and being forced to buy at record highs. So just buy the bloody dip. Not financial advice though. So getting back to Mara. Currently with the close today, we found ourselves at about 15%, just over 15% from its all-time high. It's quite impressive considering it's not that far off of where Bitcoin is from its all-time high. So Mara makes perfect sense, following Bitcoin to the T. Investors in Marathon certainly can't be complaining at a time like this. But Riot, on the other hand, and this is remarkable to me considering the fact that Riot and Mara were always neck and neck through this entire run up earlier between late last year and early this year. And Riot consistently outperformed Mara over and over and over again. Yet Riot is nearly 198% from its all-time high that it formed earlier this year. How does that even happen? And people have got to be asking themselves, what is going on here? I know I have been. And I'm aware that there were some articles out there, that the usual hit pieces that cherry pick little bits of information to try to make it look like there's some terribly inefficient miner. That is just not the case. But I will come back to talk more about this, but we're just going to carry on to have a look at some of the other ones and see where they stand. Stocks like Any, it's still got an 85% to go, but this is one I wouldn't really count. It wasn't really involved in the previous cycle. It's a future merger. It's not even an entirely full player yet. So it still has some time for that story to develop. Bit Digital, well, we know this is one that I've warned about many, many times. It is getting itself reestablished in North America, but as you can see, 240% from its all-time high. This is just not the same company it once was. Getting kicked out of China like that is gonna set this one back. So this plays into what I was talking about, that not all these companies are created equal. They don't all have the same opportunity. A Chinese miner simply has a different risk profile. That's what I was trying to get at when I was warning people against this stock back in January. When it was up at levels around here. So that's how this one tended to play out. And again, this pump that happened here was on the back of some overly optimistic information and a definite short squeeze. So a good opportunity for bag holders to exit, which it seems they did. So this is where, if you are a holder of a specific stock or specific company where the fundamentals are just no longer aligned, you do have to evaluate that. And if you get an opportunity to unload it, then I would take it. That's my point of view on it, at least anyways. Then we have our darling, Hut 8. This is a company I've liked for quite some time, ever since I got a chance to tour that facility and also speak with the CEO, Jamie Leverton. Obviously, we know this was the favorite pick by Mr. Wonderful, Kevin O'Leary. Hut 8 has been making tons of great moves, and it's only 11% from its newly acquired all-time high. It actually surpassed the former all-time high, the only stock to do that as of yet. So yeah, Hut 8 investors are living the good life. Now, as for GREE, I'm not even going to say anything. This poor stock has got a long way to go, and I can't even begin to hypothesize or predict when things are going to turn around for this company. But I would not be surprised to see a massive short squeeze show up in this stock out of the blue. To my knowledge, there are some concerns over the possibility that their permit may not be renewed. We do know that they operate in upstate New York, which is not known to be friendly to cryptocurrency companies or Bitcoin or anything of that nature. But me personally, I do think a lot of that is overhyped FUD. A company that's already in operation, I think they'd be hard pressed to come up and deny that company the ability to continue operating simply because some people don't like them there. I could be wrong on this, but that's my opinion on it, at least. Bitfarm's another one that's been getting slaughtered and is a whole 105% from its all-time high. Now, that was a massive wick up on one single day, but hey, an all-time high is an all-time high. The point is, it's been pretty apparent that this stock has been trading down while Bitcoin's been going up. Another victim of these capital raises. And this is basically the number one issue here. In this business, timing is everything. If you're doing a capital raise during a Bitcoin bull run, these stocks are going to underperform. And that's only one of the reasons why underperformance could be a factor. You also have to assess the individual risks present with these individual companies, and also the overall profile of the company itself. How much hash rate have they got? What's their future expansion plans? Do they have electrical capacity secured? Have they begun construction on those facilities? How much lead time is there going to be? Have they secured the proper hardware? These are all risk profiles that each individual company needs to be assessed based on. Also, what's their HODL position? How much Bitcoin have they got on their balance sheet? That's a big one. One of the reasons why Marathon has been doing so well. But also, they have the biggest and most ambitious build-out plans, bringing them up to, I think, just over 13 exahash by the middle of 2022. But so to highlight this, I'm going to do another comparison between Riot and Marathon, because those were the first two stocks I covered on this channel that were mining stocks. Way back in November of 2020, those are the first two companies I compared. And my argument back then was that Marathon was going to outperform Riot simply because it had a far more aggressive build-out pipeline. They were going to grow their hash rate much faster than Riot. Riot at the time was substantially larger than Marathon. So those two battled it out for months. But generally speaking, they remained pretty close, neck and neck, until now, where clearly Marathon has become the decisive winner as far as gains is concerned. So the question is there something fundamentally wrong with Riot that would warrant it being valued at half that of Marathon currently? I had a look at both of those companies and their performance updates, and oddly enough, in September, Riot mined 19.2% more Bitcoin than Marathon did, despite having a lower hash rate. And this plays into the reality that I covered in one of my videos, that Marathon was probably having some difficulty with their mining pool and maintaining its uptime. There were multiple days at a time where we saw that they didn't mine any Bitcoin at all. So that's obviously contributed to the fact that their Bitcoin production had dropped substantially during that period. The reported hash rate for the two companies come the end of September was 2.6 exahash for Riot and 2.7 exahash for Mara. So very, very close, yet Riot mined 19% more Bitcoin, despite having slightly less hash rate. So as far as production is concerned, they're neck and neck. So one of the big differences between the two companies at this point is the fact that Marathon has almost exactly twice as much Bitcoin on its balance sheet than Riot does. And that's as a result of the large amount of Bitcoin that Marathon purchased at the beginning of 2021. Marathon currently holds 3,501 more Bitcoin on its balance sheet than Riot does. But that certainly doesn't explain the additional $2.5 billion more in market cap valuation. That 3,500 Bitcoin is only valued at about $200 million. So that's quite a premium to be assigning to if you only count that. So obviously the only other factor that they could be assigning value to would be the future hash rate. But again, this is where risk profiles start to come into play. Riot has already secured all of the power, all of the transformers, all of the equipment, and the structures, and are currently manufacturing those. Everything is already secured. there's no risk of performance and acquisition for those items. So they're going to be able to install their miners as they are delivered at will. I recently toured the facility myself and saw all of this work taking place. The last update we have from Marathon was that they had secured through a binding letter of intent with Compute North to build out a 300 megawatt facility somewhere in Texas. The location hasn't been disclosed yet, and we haven't received any further updates yet on the progress of construction, what was meant to begin this month. So I am looking forward to hearing sometime next week what the progress is on that particular facility. 300 megawatts is a big project. So investors in Marathon are definitely going to be wanting to be paying close attention to what announcements get made about that in the very near future. But based on all of this, it's pretty evident that there is a massive discount currently associated with Riot. And that's simply the result of the fact that they've been raising money during a time when Bitcoin's been on a massive bull run. And it's still not 100% clear whether or not this capital raise has been completed. $500 million is a lot of money to be raising, but I do believe they will be putting it to very good use. Marathon, on the other hand, hasn't completed any new capital raises, but their cash on hand has dropped considerably, which is why they've had to take out a $100 million loan. But even that isn't going to last forever. So some form of capital raise will be in their future. It is unfortunately inevitable, and these are the cycles that we're forced to deal with while investing in mining stocks. And that's just one of the factors that causes these companies to decouple from Bitcoin's price action. The hardest part about it, obviously, is timing these events. I know I talked a lot early on when I started this channel and started covering mining stocks about how holding and doing nothing at all tends to be the better move in the long term. However, you cannot ignore these market forces. So I hope that helps shed a little bit of light on why these prices of these different companies tend to move the way that they do with respect to one another, and especially with respect to Bitcoin. Try to keep some of those things in mind and assess the positions that you have. You have to make your own choices where you want to be, but just know that sometimes, despite the way things appear to be moving, things can change, and they can change very, very fast. The best thing that you can do is know what you're holding and why you're holding it. Make sure you have an investment thesis. Don't just follow the herd and go wherever anyone else is going just because that price is going up. Do the work, understand it for yourself. That's how you maintain your conviction. And that's where long-term investment strategies start to play out. And in time, these types of decisions will get easier and easier and be a lot easier for you to identify. But there is a luck factor in this as well. Sometimes stocks that really shouldn't move take off for no apparent reason. Or sometimes the fundamentals take a whole lot longer to come to the surface, where just your average, even institutional investor sees what it is and what its true worth is. Sometimes you just have to suffer and wait until your investment thesis pans out. It's not going to do it on your time or when you think it should. The market just does these things all in its own time. But I have to make it perfectly clear that just because a company has been underperforming does not mean it will reverse trend and suddenly take off. Some of these companies do have fundamental issues. You should know what their cash on hand is. You should know how much Bitcoin have they got on their balance sheet. You should know what their current hash rate is. You should know what it's projected to be 6 months, 12 months out. Beyond that, there's really no point because nobody knows. And you should know how they plan to finance all of that. Where's the money going to come from? When you put all that together, you can start to assess the risk associated with each one of these companies individually and decide for yourself where you want to focus your efforts, focus your investment. Because when they run, they do outperform Bitcoin in the short term. However, I am of the belief that Bitcoin and Ethereum, which is one of the other focuses of my channel these days, are fundamentally better long-term investments. And I'm talking 10 to 20 years out. Mining is going to look very, very different, and mining companies are going to have to evolve if they're going to continue to be largely successful. I'm not going to run down that tangent because it definitely deserves its own video. I will do a video at some point explaining what mining companies might look like, say, in the year 2030 or 2040, because many people don't quite understand the fundamental nature of mining and how the profitability will change over that time span. But those that do find themselves successful and sustainable will have a huge advantage so long as they're able to maintain a large holding of Bitcoin. I do believe that that holding of Bitcoin is going to open doors for certain institutions that are able to maintain that holding. Bitcoin miners will be among them, but not all. Some will not survive. And like I said, that we'll talk about more. So some parts of this video might have made you feel better, and some parts might have made you feel a little bit worse. But those are still decisions that you yourself need to make. That's all for this one. Now let's get back to empire building.